Hi guys, welcome back. This is another video brought to you by myself, Ryan, and today we are going to look at Bitcoin because the last time we made a video on Bitcoin we was hovering around these areas and we was looking at these liquidity levels below these wicks to come in and be taken, which is exactly what we've got at the minute, as you can see here, with candle bodies now closing back above this wickage here. So things are really looking good at them in the market at the minute. We got the move down that I was looking for, but I think now the question is that enough to then continue to the upside, or do we need to prepare for some key levels, key liquidation levels in the market that we need to be prepared for? So I think what makes the most sense to start out with is, if you remember in my last video, when looking for the move down, obviously we had this level here, which we've come in and taken, which is really nice to see. But the key level that we had marked out was this zone here, where we had the drop in price before then the breakout to the upside. So if you guys can imagine, let's say for instance for some reason we started buying the big bullish candles, which we never do around here, at these levels, the market then enhanced our view and started giving us a big bullish candle here. Imagine if we was entering long up here at the top of this candle. Where would your stop loss be if you was entering at this level? I think a lot of people's stop losses are going to be below this level at this liquidity zone, in my opinion, at around the 16,300 zone to around the 16,200 zone. So I think using that wick there, we can outline another potential zone to the downside. Now, what I'm not saying is, I'm not saying we have to come down and take this level, because the move down we was looking for, we've taken that level, and in big bullish momentum, that can be enough, as I've said, to continue the move to the upside if the market is looking really bullish for a move to the upside. But really, realistically, if we are thinking about the market at the minute in low liquidity, no one's really willing to put the money in. I think the market at the minute will be seeking liquidity, and all of the liquidity from people trading these breakouts here will be down here. So I think if we start thinking about risk to reward, if price can shoot up from here, great. But realistically, we know we can get the move down first, which means the risk to reward is not really in our favour because we are in the middle. So sometimes in the market, I think the best decision is actually no decision. Obviously, you guys know that we was bullish from down here and looking for longs, taking profits up here. And that really is the way to play it, because then if we get this move to the downside, we can use them profits, maybe 50% of it or whatever, to add to the longs. And if the longs don't play out, it's no problem, no risk, just using profits and profit flipping. But if we get the move to the upside from here, you know, we have our spot holdings anyway that we've been accumulating, whether it's altcoins or Bitcoin or whatever you're interested in. We are starting to benefit now from all these movements in the market. So I think what makes the most sense is if we have a look at the Elliott wave count now for what we've got here, because I'm not going to lie, things are looking really good in the market, and obviously people are not expecting price to continue up, and it would be such a Bitcoin thing and a market maker thing to just say that's enough and we go from here, because a lot of people are waiting for this liquidity level down here, and sometimes Bitcoin, you know, can just do whatever it likes. Say, you know what, I'm not waiting around, I'm going, and leave everyone behind and miss the big move. So I think what I'm looking at here on Bitcoin is, if this is an impulse to the upside, 1, 2, I think this is just another minuscule 1, 2, 3, 4, 5, where we are looking for continuation in this third wave, and this third wave is looking to be a bit promising and a bit massive to the upside. But really, we have some confluence levels to the upside, because if you remember in my last video, we outlined this wick to the upside as a really key level, and I want to come and see that get filled. And I think it makes the most sense. Again, in low liquidity levels, big liquidity up here, market makers probably want to return price to that level. And obviously, as we start spiking down in this accumulation type structure, people get fearful and miss the move. So if we are looking now at a 1, 2, 1, 2 to the upside, that potentially is the wave count, and I think 20,000 zone is what I'm looking for. So if we do take the trend-based Fibonacci from the bottom of that wick there to the top of here, to the bottom of a potential wave 2. Look at that 3.618. It's a really key zone. Come out, just take the wick, perfect. I think that is the move what we're looking at. But again, people might start front running the profit taking and want to look at the 2.618. So if we are looking at a move to the upside in this fashion, I think these are potential great profit taking zones if you have built longs at the lows. But I'm not really sure about building longs at the minute, because with that potential manipulation to the move down, I think the risk to reward is not as good as it was down here. So again, everyone's risk tolerance is their own opinion and what they ever want to do, but I think the risk to reward made the most sense down at the lows, not as much here. So really, on the macro, looking for that move to the upside is a 1, 2, 3, 4, 5. And if you guys know, if you've been watching my videos, if we zoom out, that would be a wave 1 in a higher time frame. C to the upside. And you guys know that I was looking at this zone right here for Bitcoin. That's the key zone I'm looking for. Big breakdown level. Imagine all the stop losses above here. If we do the same as what we're doing down here on the lower time frame, imagining them stop losses, imagine all the shorters here. Where are their stop losses going to be? They're going to be at these wicks. They're going to be at this big bearish candle where people start to short. I think it makes the most sense for the market to return up here. But on the short term, we need the waves to the upside, we need waves back down, we need bigger waves to the upside. So I think really that could be your first wave, just your initial sign of strength, first wave to the upside. And I think that is what we could be looking for. And I'm not saying that's going to happen by February, it could take a lot longer. But really that's the wave structure that I'm looking for. So that wave count becomes invalidated if we do drop below 15,900 level. That wave count becomes invalidated and we can start looking at a potential move to the upside, but just with not as much as momentum as what we have at the minute. So market's looking really good at the minute, guys. We got the move down we was looking for. The lows have been taken. Another potential manipulation zone down to the downside. Have it marked out. Have a plan for both scenarios. And don't forget, guys, it's not financial advice, but I just thought I'd make a quick video today on Bitcoin. I ain't made one since our last video up here. So yeah, that's my weekly outlook at the minute. I'll probably update as the week goes on, see how things are going in Bitcoin. But yeah, things are looking really good. Nothing too much to comment on apart from liquidity levels have been taken. But yeah, it's not financial advice. I hope everyone's enjoyed the video today. If you did enjoy it, give it a like. If you didn't, give it a dislike. Let me know why you didn't like it and we can try and make it better in the future. But from me, that is all today, guys, and I'll see you next time. Cheers.